is a statement of assets, liabilities, and capital. And balance sheet is prepared as on date. Balance sheet is prepared as on date, and balance sheet must be agreed. So remember that balance sheet may be prepared either in permanency or in liquidity. So there are two forms we may prepare that balance sheet, either in order of permanency or in order of liquidity. So when we talk about that permanency, right now that balance sheet is in order of permanency, because first we have to consider that is fixed liabilities, then fixed asset in both sides, then we go for that is long-term liabilities, current liability in liability side, and in asset side, fixed asset and current asset. So that is in order of permanency. When we talk about that liquidity, in order of liquidity, remember, first we have to write down current liabilities in liability side, in asset side, current assets. Then long-term liability that is intact in liability side, then you have to write fixed liabilities. Similarly, in asset side, we have to write down fixed asset. So that is balance sheet prepared in order of liquidity, in order of liquidity. So if question is silent, prepare only balance sheet, then you go for that is in order of permanency. So coming to last class discussion, that is when we talk about that adjustment, we have to
permanent or liquid ಯಾವ್ದು equal.
Okay. Balance sheet is prepared either in order of permanency and or in order of liquidity. So right now that balance sheet is in order of permanency. That is in liability side, fixed liabilities, then long-term liabilities, then current liabilities. That is the order of writing balance sheet in order of permanency. Similarly, in asset side, that is heading is fixed asset, then current asset. But when question specifically says prepare balance sheet in order of liquidity, then what we have to do? First, we have to write down current liabilities in current liability in liability side. Similarly, current asset in asset side. Then after that is
Dhamnagar bhai, Dhamnagar.
Then long-term liabilities as intact. Then we have to write down fixed liabilities. Similarly, in asset side, first we have to write down current assets item. Then below that, fixed assets item, that is intangible fixed asset, that intangible fixed asset. So that is in order of liquidity. First liquid, that is current assets and current liabilities. Then in liability side, long-term liabilities intact. Then we have to write down fixed liabilities, fixed asset in both the. That is in order of liquidity. In order of liquidity, just we have to change the position, nothing else. But long-term liability, that is intact as usual. Okay. So normally that we always prepare that balance sheet in order of permanency, because always question is silent. If some question setter may ask to know whether you have an idea about how to prepare that balance sheet. Okay. So coming to
sir, please mute all.
Mute bhai, kindly mute karantu.
So coming to that last session, adjustment. We all of us know that is first we have already discussed outstanding expenses and prepaid expenses and closing stock. I think so. Once again, I'll repeat these three. First one is outstanding expenses. What is that outstanding expenses? While preparing the financial statement, we have to adjust. These are the headings. These are the important adjustment to be made while preparing financial statement or final account. What is that outstanding expenses? Current year expenses, but not paid in the current year. So when you say that suppose that is salary rupees 12,000 and outstanding salary that is 4,000. So we know that salary is the item of profit and loss account and outstanding is 4,000. And we know that is current year salary is 12,000 plus 4,000, that is 16,000. So in profit and loss account debit side, to salary 12,000, add outstanding salary 4,000. That is in outer column we have to write down 16,000 is current year salary. So,
Okay.
and we know that outstanding liability, outstanding rent, that is liability for the business. So we have to write down in liability side under current liabilities head. That is outstanding salary rupees 4,000. So that is the adjustment. And when we talk about that journal entry, so we have to write down that salary account debited to outstanding salary account, and it is shown in the either trading account or profit and loss account by adding it in concerned expenses, and it is known that shown in the liability side of balance sheet. Remember, these two are treatment of outstanding expenses. You have to write down these 2 points. One is it is shown in case of outstanding expenses, any expenses, whether that is electricity charges, whether that is wages, whether that is salary and wages, whatever may be the item from trading and profit and loss account. What is the accounting treatment? First point, it is shown in trading or profit and loss account by adding it to concerned expenses, and it is shown in the liability side of the balance sheet. So what is the journal entry? Suppose let's take outstanding rent. So rent account debited to outstanding rent account. That is the journal entry, treatment and journal entry. And that is concept or meaning. Then prepaid expenses. Second one, prepaid expenses. So what is prepaid? That is expenses paid in advance. That is unexpired expenses. So expenses which have been incurred in current year, but the benefit of which are to be received in coming years. Or what do we say? Forthcoming year expenses, but paid in the current year. That is paid in advance. So these expenses are not related to current year. Suppose let's take insurance paid in advance, or prepaid rent, prepaid wages. So what is the journal entry? Prepaid rent, jaha deithibo, that is the heading. Prepaid rent, let's take rent, prepaid rent account debited to rent account. That is the journal entry. So what is the treatment? Suppose rent paid rupees 20,000 prepaid rent 2000, rent 20,000, rent paid, prepaid rent that is 2000. So we all of us know rent is the item of profit and loss account. So in debit side of profit and loss account, we have to write down to rent 20,000 less deduct prepaid rent 2,000. That is 18,000. We have to write down in outer column. So if someone asks what is the current year rent, that is 18,000 is the current year rent. But how much paid? 20,000 paid. That is 2,000 prepaid rent that is included in that 20,000.
Slide change, sir.
No, these are the adjustment. These are the adjustment. यार problem हमें खाली आपण लेखि नियंतु मु जहा कहूची point लेखंतु. Okay, we will discuss in physical classroom. हमें problem करिबा physical class रे. कारण एठी आपण से बुझी परिबेनी, आपण खाली practice करंतु कोन ना simple financial statement. Then adjustment will go for problem in class, physical class. And other problems we have to do, but financial statement we have to do in physical class mode. Okay, just to know what are the adjustment.
Sir, can you repeat the narration of outstanding expenses?
Okay.
Yes, sir.
Okay, I will repeat. What is outstanding? What do you mean by outstanding?
The current year expenses but not paid in current year.
What not paid? That means we have to add, because our objective is to find out true and correct profit or loss, true and correct financial health. Never we ignore. If that is outstanding rent, so we have to add in concern head, that is rent. So rent, to rent, that is the profit and loss account item, rent. To rent, rupees, let's take 24,000, less, that is, sorry, R, that is outstanding rent, that is 4,000, that is 24,000 or 26,000. Then that outstanding rent, we have to write down in, where we have to write down? Liability side of the balance sheet.
Liability
Okay.
side. Yes, sir.
Liability side. That is the outstanding expenses. Then prepaid rent, prepaid expenses. That is expenses paid in advance, or we may say unexpired expenses. समस्त मोर रिक्वेस्ट यू जस्ट नोट डाउन जहां सुनुचंती जस्ट टू नोट डाउन टिके टिके लिखि नउतले देन वी विल डिस्कस इन फिजिकल मोड क्लास. सो what is that prepaid expenses? For coming year expenses but paid in the current year. So we have to deduct excess paid ho jaichi, that is not related to current year expenses. That is not. Sanjay Kumar Sahu kuantu.
Sir, insurance prepaid with the haba?
Habu any head semti कोटा हबा हमें कहि परिबन जहा क्वेश्चन ए देइथिबो accordingly we have to adjust. So insurance paid in advance rupees 2,000. So concern head is insurance paid. So two insurance paid 20,000, two insurance paid 20,000 minus or less if that is insurance paid in advance is 4,000. So 20,000 less 4,000, and that 4,000 we have to shown in asset side of the balance sheet under current assets heading. Clear? So what is the treatment? Accounting treatment. First point, under prepaid expenses, it is shown in debit side of profit and loss account by deducting from concerned expenses, concerned head of expenses. And second point, it is shown in the asset side of the balance sheet. Asset side of the balance sheet. Clear? Then next one we have already discussed, that is closing stock. What is that closing stock? That is unsold goods. Unsold goods. It is valued at cost or market price, whichever is lower. So what we have to do? What is the accounting treatment? First meaning then accounting treatment, then that that adjustment entry on closing stock, journal entry. So that is unsold goods, that is stock available at the end of the date, that is 31st March. So what is the treatment?
That is a
Remember,
asset.
it is shown on the credit side of trading account by closing stock in trading account, and it is purely given in adjustment in our outside trial balance, outside the trial balance, because it is valued at the end of the year. It is purely an adjustment entry. So what is the accounting treatment? It is shown on the credit side of trading account. And second point, it is shown on the asset side of balance sheet under current asset, under current asset. So what is the journal entry? That is adjustment entry. Closing stock account debited to trading account. Closing stock account debited to trading account. This is all about closing stock. First one is outstanding expenses, then prepaid expenses, then third one is closing stock. Then today's discussion, that is depreciation, fourth adjustment. What is depreciation? It is charged on fixed asset. It is charged on fixed asset, on building, on furniture, on plant and machinery. So by charging depreciation, the value of fixed assets decreases. Why? Due to the passage of time, due to their continuous use. So decrease in the value of fixed asset, that is called depreciation. Remember, depreciation is purely loss. So that is in debit side of profit and loss account. So what is the accounting treatment? It is shown on debit side of profit and loss account, like other expenses, like other expenses. So to depreciation. Suppose in question that is shown machinery rupees 1 lakh. Machinery rupees 1 lakh. In additional information that is given, depreciation charged on machinery rupees 10%. Sorry, not rupees, 10%. That depreciation charged on machinery 10%. So machinery cost is 1 lakh. Depreciation is 10%. At the end of the year, we have to charge depreciation. So how much depreciation is 1 lakh 10%?
10,000.
10,000.
10,000.
Very good. Very good. 10,000. So we have to write down in debit side of profit and loss account to depreciation rupees 10,000. So what is the accounting treatment? First point, it is shown in debit side of profit and loss account because it is loss toward the business. Like other expenses, we have to write down that is charged against fixed asset always. So second accounting treatment, the amount of depreciation is 10,000. So that is deducted from concern asset in balance sheet. So under fixed asset, we have to write down in tangible asset under head, first one, that is tangible asset. Under tangible asset, first item is, let's take machinery. Machinery 1 lakh less depreciation 10,000. So in outer column, we have to write down 90,000. So that is the accounting treatment. We have to adjust that. Then what is the adjustment entry? Depreciation account rupees 10,000 to machinery account 10,000. Depreciation account debited rupees 10,000 to machinery account machinery account 10,000. Clear? That is all about depreciation. Once again, depreciation is always charged on fixed asset, like building, furniture, plant and machinery, and value of fixed assets decreases. Kahe ki kamibo? Why? Because due to passage of time, due to their continuous use. So the decrease in the value of fixed asset is called depreciation. It is purely a loss toward the business. So what is the accounting treatment? It is shown in debit side of profit and loss account to depreciation. While we prepare the profit and loss account, we have to write down to depreciation. Then the amount of depreciation is deducted from concerned asset in balance sheet. Under fixed asset heading, machinery, subheading is tangible fixed asset. Under that machinery 1 lakh, less depreciation 10,000. So 90,000 we have to write down in asset side, in outer column. So what is the adjustment entry? Depreciation account debited 10,000 to machinery account 10,000. What is the narration? As far as this the adjustment entry, being depreciation provided on machinery. Clear? Then very next adjustment, that is accrued income, ACCRUD, accrued income, or outstanding income, or income receivable. Too important already, that item we have discussed, that is outstanding expenses and prepaid. Right now coming to income, accrued income. Otherwise that is income receivable or outstanding income. So what is that accrued income? Income which is earned in the current year, but not received. So that we say that is outstanding. That is accrued income. I'll say that is, sorry, that is commission, that is 200, accrued commission, that is 50. Commission, that is 200, and accrued income 50. So what is the treatment? In profit and loss account, in credit side, because this one is income, that is accrued. So by commission rupees 200 and accrued commission 50. So in outer column we have to write down 250. In profit and loss account, in income side. So second accounting treatment, it is shown in the asset side of balance sheet under current asset. So accounting treatment, first point, it is shown in the debit side of profit and loss account by adding it to concerned income. We have to add with the concern, because that is accrued income, outstanding income, or income receivable. That is income which is earned in the current year but not received. So what is the adjustment entry? Accrued income account debited rupees 50. That is accrued commission here. Accrued commission account debited rupees 50 to commission account 50. Narration, explanation, income earned but not received as far as commission is concerned. So next one, that is interest on capital. Very interesting. Interest on capital. We all of us know that owner of business always takes interest on capital invested by him. So what is the treatment? We know that is interest on capital, that is revenue expenses for the business. Who will take interest? Owner will take interest because he started business, he invest in the business. So who will pay? Business will pay. So that is interest on capital, that is treated as revenue expenses of business. So what is the treatment? Accounting treatment. It is shown on the debit side, shown in the debit side of profit and loss account because it is expenses. Second point, it is shown in the liability side of balance sheet. And you have to add in the capital. Why? Because interest on capital increases the amount of capital invested. So once again, interest on capital, owner of the business takes interest on capital because he or she started the business, invest in the business. So it is purely interest on capital is purely revenue expenses of the business. And when you talk about that accounting treatment, first one is it is shown in debit side of profit and loss account. Second one, it is shown on the liability side of the balance sheet. We have to add in capital because interest on capital increases the amount of capital invested. Yes. So interest on capital. So there are two questions arises. Who will take? Who will pay the amount? Who will take the amount? Owner will take. Who will pay? Business will pay. Who started business? Owner started business. So for the investment in the business, sometimes that owner may take interest on capital. So that is expenses for the business. Which type of expenses? Revenue expenses. Revenue expenses, day-to-day expenses. Okay, that is not capital expenses. What is capital expenditure? Investment in long-term asset, investment in productive assets, that is fixed asset, non-current asset. Clear? That is other part. So the interest on capital, that is purely revenue expenses of the business. So what is the accounting treatment? It is shown in debit side of profit and loss account to interest on capital. It is shown on the liability side of balance sheet. We have to add in the capital because this interest on capital increases the amount of capital. So what is the adjustment entry? Interest on capital account debited to capital account. Sorry. Interest on capital account debited to capital account. Suppose we'll discuss one example.
Finish kar sir. Hala, I won't. Finish kar sir.
X started business.
Okay, fine.
X
Finish kar sir.
started business. X started business with rupees 1 lakh. Interest is charged 5% per annum. How much amount? X started business 1 lakh. Question says interest is to be charged at the rate of 5% per annum. So what is the amount? 5,000.
5,000.
Yes. 5,000. So what is the journal entry? What is the adjustment entry? Why you say adjustment entry? Just to recall, accounting cycle. Accounting cycle starts from identification of transaction and ends with preparation of financial statement by passing 3 entries. What are the 3 entries? Adjustment entries, closing entries, and reverse entries. Yes or no? No response. Padi Babu,
Sir, closing entry, reverse entry ଆପଣ ତ
entry and
କହିନାହାନ୍ତି।
adjustment entry. ଆମେ ଏখানে ବର୍ତ୍ତମାନ adjustment entry କରୁଛେ।
ହଁ,
closing entry already କରିଦେଇଛେ। trading account, profit and loss account and balance sheet just last 5
ହଁ,
minute
closing
discuss.
entry ହେଇଯାଇଛି। ହଁ,
Adjustment entry ଚାଲିଛି। Then what is the accounting treatment? It is shown on debit side of profit and loss account. Second one is it is shown in the liability side of balance sheet. We have to add in capital because interest on capital increases, enhance the amount of capital invested. So what is the journal entry? Interest on capital account 5,000, debited 5,000 to capital account 5,000.
capital.
So this is all about interest on capital. I think 6th adjustment, 6th or 7th, 6th. Then 7th or 8th one, that is interest on drawing. Interest on drawing. ମୃତ୍ୟୁଞ୍ଜୟ ବାବୁ କୁହନ୍ତୁ କଣ କହୁଛନ୍ତି? ଶୁଭୁନି କିଛି। ଆଉଥରେ ବନ୍ଦ କରି କୁହନ୍ତୁ। Okay. ଆପଣ ଯାହା କହୁଛନ୍ତି କିଛି ଶୁଭୁନି। ମୋର ସେଇ ଅବସ୍ଥା ହେଇଥିଲା ଜଷ୍ଟ ମୁଁ ଆଜି 10 minutes delay ରେ ଜଏନ୍ କଲି। Interest on capital ଆଉଥରେ କହିବି। Okay, just to listen. Okay, just listen. Interest on capital. So here question may arise, 2 questions. Who will take? Who will pay? Owner will take, business will pay.
Owner.
Yes. So owner of business takes interest on capital because he or she started the business, invest in the business. So it is purely interest on capital, that is purely revenue expenses of the business. So what is the
Loss
account?
to business.
Never will say that is loss.
Lost
That we have to pay. That we have to pay because owner started business, business will pay. So it is shown in debit side of profit and loss account because that is expenses, revenue expenses. Then it is shown in the liability side. Interest on capital added with capital. Capital add interest on capital. Because that increases, interest on capital increases the amount of capital invested. So what is the adjustment entry? Interest on capital account debited to capital account. Suppose let's take X started business with 1 lakh or Hari started business with 1 lakh. And interest is to be charged 5% per annum. So what about interest on capital? Interest on capital is 5,000. So this 5,000 we have to write down in profit and loss account to interest on capital 5,000, and in balance sheet under fixed liabilities, first item is capital. Capital is 1 lakh. Add interest on capital 5,000. So in outer column we have to write down 1 lakh 5,000 is capital. Clear? Then next one is interest on drawing. What is drawing? We have already discussed drawing. The word used when owner, proprietor withdraw cash or goods from the business for his or her personal use. So cash paid to son's tuition fees as against rupees 5,000. So that is not business transaction, that is proprietor's personal transaction. that we have to use the word drawing. So owner of business always withdraw money or goods from the business for his personal use. That is called drawings. So we have to charge. Interest on drawing is the income for a business. Who withdraw? Owner. Kahaku se dabo? Business ku dabo. Interest on drawing is the income for a business. So what is the accounting treatment? First one, it is shown on credit side of profit and loss account because that is an income. It is shown on credit side of profit and loss account. That is indirect income. In profit and loss account, we have to write down by interest on drawing. Then second point, it is shown on the liability side of the balance sheet. We have to deduct from capital because it reduced the owner's capital. It reduced the owner's capital. First accounting treatment, it is shown in credit side of profit and loss account. Second one, it is shown on the liability side of balance sheet. We have to deduct from capital. Why? Because it reduced the owner's capital. Suppose let's take that the interest on drawing is rupees 300. Capital is 1 lakh. And drawing is 10,000. So what is the adjustment? Interest on drawing is how much? 300. So we have to write down. Okay. Capital is 1 lakh. Drawing is 10,000. Interest on drawing is 300. These are the three items that is given. And we know that is capital, that is inside item, trial balance. Drawing is the inside item. And interest on drawing, that is shown in additional information or below the trial balance, or heading is adjustment or additional information. That is interest on drawing, rupees 300. So
drawings कितने sir?
300, 300.
Okay.
Drawing is 10,000. Sorry, drawing is 10,000. Interest on drawing is 300. So what is the adjustment? We know in accounting treatment, it is shown in credit side of profit and loss account. That is income for the business. That is indirect income. So by interest on drawing 300. Profit and loss account. Profit and loss account. Then coming to balance sheet. Capital is 1 lakh. Less drawing 10,000. That is 90,000. Less interest on drawing 300. So in outer column, that is 89,700. In outer column, that is 89,700. Clear? Interest on drawing. Once again, I'll repeat just to listen. Remember, owner of the business, proprietor, withdraw money, cash or goods from the business. Why? For his or her personal use. That is called drawing. That is called drawing. So interest on drawing is the income for the business. And it is shown on the credit side of profit and loss account. And it is shown on the liability side of the balance sheet. We have to deduct from capital. It reduces the owner's capital. Owner dauchi business ku because owner withdraw karichi cash, withdraw karichi goods. So that reduce the capital. So suppose capital is 1 lakh, drawing is 10,000, interest on drawing is 300. So in profit and loss account, we have to write down by interest on drawing 300. In balance sheet, under fixed liabilities, first item is capital. Capital 1 lakh, less drawing 10,000, that is 90,000, less interest on drawing 89,700. So what is the adjustment entry? Drawing account debited to interest on drawing account. Drawing account debited to interest on drawing account. Drawing account debited rupees 300 to interest on drawing account 300. That is the adjustment entry. Okay, can I ask one question? In which books of account we have to pass this adjustment entry?
Subsidiary book.
Oh, book re. That is journal proper. That is journal proper. Same format, but we have to write down journal proper. All adjustment entry, rectification entry, closing entry, we have to pass in the journal proper. Then coming to next adjustment, that is interest on loan. Interest on loan. So remember that interest is to be paid on loan. So it is expenses for the business. Sometimes business expand the areas of operation or expand the business. It requires huge amount. So that can be taken from the banks, financial institution in the form of loans. So interest is to be paid on such loan. So interest on loan is expenses for the business. So what is the accounting treatment? It is shown in the debit side of profit and loss account. Expenses. So debit side of profit and loss account by writing interest on loan. Only interest amount. Interest on loan. And second accounting treatment, it is shown on the liability side of the balance sheet. It is shown in the liability side of the balance sheet. By we have to add the in the loan account. So profit and loss account, that is interest on loan account debited to loan account. Suppose if the business has take loans 50,000, interest is due 10% per annum. Interest is due 10% per annum. So interest on loan account debited to loan account. Debit side of profit and loss account and liability side of balance sheet. If that is long term, we have to show in the long term liabilities. If it is short term, then we have to show in the short term liabilities. So these are the adjustment. Next one is very important, that is bad debt. What is bad debt? There are three types of debt: good debt, bad debt, and doubtful debt. Bad debt, three types: good debt, bad debt, doubtful debt. So we all of us know that each and every business house sells goods to customers either in cash basis or credit basis. So customers to whom the goods are sold on credit basis, so party is known as debtors. Party is known as debtors. So when you say that party is known as debtor, the amount due from debtors that could not be realized because of their insolvency, because of their death, or any other reason. So such amount is known as bad debt. What we say, irrecoverable amount from debtors. Irrecoverable amount from debtors, bad debt. Bad debt. So it is shown in the debit side of profit and loss account. It is shown in the debit side of profit and loss account. Then it is shown in the asset side of balance sheet,
Kindly
We have-
repeat.
we have to deduct from debtors bad debt, that is irrecoverable amount from debtors due to death, due to the insolvency, or any other reason that we never recover from debtors. So, what is the accounting treatment of bad debt? It is shown in debit side of profit and loss account to bad debt. Then it is shown in the asset side of balance sheet. We have to deduct from debtors. So, let's take bad debt is 1,000. Bad debt is 1,000. Debtor is 50,000. What is the treatment? So in profit and loss account, we have to write down that is to bad debt 1,000. And in balance sheet, in asset side, under current asset, debtor that is 50,000 less bad debt 1,000. So in outer column, we have to write down 49,000. 49,000. Once again, suppose debtor is 50,000, bad debt is 1,000. So how to adjust? We have to write down in profit and loss account, that is the accounting treatment, debit side of profit and loss account, to bad debt rupees 1,000. Similarly, in balance sheet, under current assets, first one is debtor. So debtor 50,000 less bad debt 1,000. So 49,000 we have to write in outer column. Clear? That is all about bad debt. What is the accounting treatment? Sorry, adjustment entry. Bad debt account debited rupees 1,000 to debtors account 1,000. Bad debt account debited rupees 1,000 to debtors account rupees 1,000. So, in case of bad debt, sometimes inside the trial balance that is given debtors and bad debt. Same thing, debtors 50,000, bad debt is 1,000, that is inside the trial balance. Because debtor shows debit balance, because asset, similarly bad debt that is lost toward the business, that is shown in asset side. Sorry, in debit side, debit balance, both debtor as well as bad debt. But in adjustment, some heading says that is further bad debt is 1,000 or further bad debt 2,000. Let's take. Once again, inside the trial balance, debtor is given that is 50,000, that shows debit balance. Bad debt shows that is 1,000, that is lost toward the business, that also debit balance. These two figure is given along with other figures. In additional information, another adjustment to be made, that is further bad debt rupees 2,000. So how to adjust? How to write? We know that is bad debt is the item of profit and loss account. So to bad debt that is 1,000, add further bad debt 2,000.
2,000, 3,000.
So total 3,000 we have to write down in profit and loss account. But remember, when you go through the balance sheet, debtor is 50,000 less.
3,000.
No, less. That is further bad debt is how much? 2,000. Further bad debt is 2,000. That is in additional information. So we have to deduct that further bad debt 2,000, not 3,000. Remember, one bad debt that is inside, and in adjustment, further bad debt is inside. Bad debt is inside the trial balance. Bad debt is 1,000. But in additional information, bad debt is 2,000. That 2,000 we have to deduct from debtor, not 3,000. When that is
That-
inside, that is previous year, bad debt continue hochi, bad debt achi. As on 31st March, এই বছর bad debt hochi 2,000. We have to adjust that. That is shown in additional information. That is shown in adjustment below the trial balance. So we have to deduct that amount. That amount is 2,000. Once again, I'll repeat. Bad debt 50,000, that is inside the trial balance. Debtor, that is inside the trial balance, 50,000. Bad debt is 1,000. Sorry, debtor is 50,000. Bad debt is 1,000. In additional information, in one point that is written, further bad debt 2,000. How to adjust? In profit and loss account, in debit side, I done 2 bad debt. That is inside trial balance 1,000. Or further bad debt, that is 2,000. Total is 3,000. So how to adjust in balance sheet? That is debtor 50,000 less bad debt, that is further bad debt, that is 2,000. So 48,000 we have to write. Okay. You have to deduct further bad debt, not total bad debt, from debtors. So what is the adjustment entry? Bad debt account debited 2,000 to debtors account 2,000, not 3,000. Okay. Adjustment entry is for 2,000. That is in additional information. Inside the trial balance, that is loss. So we have to write down in profit and loss account. Because in trial balance inside, that means expenses, some headings are coming under expenses, income or asset or liabilities or capital. Clear? So that is all about your bad debt. Any question?
Sir, ଟିକେ ଯୋଉ provision for doubtful debts କହିଥିଲେ ଟିକେ ଭଲ ସେଟା ଟିକେ
Once again, now tell kuantu.
Sir, provision for doubtful debts adjustment entry sir.
Further bad debt.
Nice sir, doubtful debt.
Madam ଟିକେ ଆଉ ଥରେ କୁହନ୍ତୁ, voice break ହଉଛି.
Sir, doubtful debts.
Okay. Doubtful debt को हमें जाइने. Doubtful, okay. Good debt, bad debt and doubtful debt. ଆପଣ ଗୋଟେ ବିଜନେସ୍ କରୁଛନ୍ତି. ଆପଣଙ୍କ ନାଁ ହଉଛି କଣ? ସୁଚିସ୍ମିତା ର ଶାଶ୍ୱତୀ. Okay. So ଆପଣ ବିଜନେସ୍ କରୁଛନ୍ତି, ଆପଣଙ୍କୁ ପାଖରୁ ଗୋଟେ କଷ୍ଟମର ସବୁବେଳେ ଜିନିଷ ନଉଛି, ଇନ୍ ଟାଇମ ରେ ପଇସା ଦଉଛି, ବାକିରେ ନଉଛି, ପଇସା ଦଉଛି. ଆଉ ଗୋଟେ କଷ୍ଟମର ଅଛି, କଣ କରୁଛି ନା ନେଇଗଲା ଜିନିଷ ଆଉ ଆସିଲାନି, 6 ମାସ ବର୍ଷେ ଆସିଲାନି, ଦେଖା ସାକ୍ଷାତ ନାହିଁ. ତ ଆପଣ ତାକୁ କଣ କହିବେ? ଆଉ ଦବନି. କିନ୍ତୁ ଆଉ ଜଣେ ବ୍ୟାଡ୍ ଡେଟ୍, ଆଉ ଜଣେ କଷ୍ଟମର ଅଛି, ମଝିରେ ଆସୁଛି, 20,000 ଟଙ୍କା ନେଇଯାଉଛି, 2,000 ଟଙ୍କା ଦେଇଯାଉଛି, ପୁଣି 15,000 ନଉଛି, 5,000 ଦେଇଯାଉଛି. ତ ଆପଣଙ୍କ ତାପରେ ଡାଉଟ୍ ହଉଛି, ଆରେ ଇଏ 6 ମାସରେ ମଝିରେ ଆସୁଛି, ଦେଇଯାଉଛି, ପୁଣି ନେଇଯାଉଛି. ତ ଡାଉଟ୍ ହଉଛି ସେ ଆଉ ଆସିବ କି ନାହିଁ, ଦବ କି ନାହିଁ. ତ ଡାଉଟଫୁଲ ଡେଟ୍. And we have to make provision for bad and doubtful debt. We have to make provision for bad and doubtful debt. Because out of debtors, that some debtors from which the realization is doubtful. ଆଉ ଦବ କି ନାହିଁ, ଏମିତି ନେଇକି ତାର ବଢି ଚାଲିଲାଣି, 40,000 ହେଇଗଲାଣି, ତ ତାକୁ ମୁଁ ଜିନିଷ ଦେବି କି ନାହିଁ, that you have to thought. And other point, ସେ 45,000 କେମିତି recovery ହବ, ତ that is also doubtful. So you have to create provision for bad and doubtful debt.
Yes.
Okay, any other question?
One doubt is there.
କୁହନ୍ତୁ.
Sir,
Okay, କୁହନ୍ତୁ।
Sir, why we are net profit in liability side of balance sheet? Because net profit is a income.
Vishnu
No?
sir, good morning.
Morning.
Net profit.
Why we are in the liability side of balance sheet?
Okay. So, what a common concept. Why we add net profit? Why we deduct net profit? ଆଚ୍ଛା ଆପଣ ଗୋଟେ ବିଜନେସ ଚଲାଉଛନ୍ତି ଆଜ ଏ ଓନର,
Hmm.
ଆପଣଙ୍କର ଇନକମ ହେଲା,
Hmm.
କିଏ ନବ ତାକୁ?
Obviously, sir, business owner. No.
ଓନର ନବ। ଏକ୍ସପେନ୍ସେସ୍ ଇନକର୍ଡ, ହୁ ୱିଲ୍ ବିୟର ଦ୍ୟାଟ୍? ଓନର। So ସେମିତି
sir.
net profit ହେଲା, business ର all expenses income ନେଲା ପରେ at the end of the year you find out that net profit. So who will take that?
The owner.
Owner. So that
Owner.
enhance the capital, that increase the capital. If loss, who will bear? As an owner, you have to bear.
Owner.
Okay. So for that
Okay.
reason, you have to add. If loss, you have to deduct.
Okay, sir.
Okay. Thank you. Thank you, Vishwa sir.
Thank you. Thank you, sir.
Thank you.
Thank you, sir.